Everybody, it's your boy Chad C. No Roper. I am the director of the Amplifier program here at 88.9 Radio Milwaukee. And I have my good brother all the way from Las Vegas, but he's really a Milwaukee native. He's born right here in the city of Milwaukee. My good brother, Will Roundtree. I'll call him the credit and funding guru. How you doing, my brother?
Man, I'm blessed, man. Thank you for having me. It feels good to be back in the snow.
Literally.
Sarcasm.
Right.
Sarcasm.
Man, listen, out of all the days of the week,
Man.
that snow, I'm small, that snow so heavy, man. The snow plow was having a problem moving that joint.
And my blood is thinned out, Chad. So
Yeah.
I'm cold. You know what I'm saying?
Man, listen, we appreciate you still making it. I'm glad you flew in early because
Yes.
you might not have made it.
Probably
So
would've got
that
stuck.
was a blessing, man. And I want to shout out the audience as well as people rolling on in, braving the weather. I want to shout y'all out too, man, because y'all could have been anywhere, comfortable in your own home, but you showed up anyway. So I appreciate y'all. And I also want to shout out B. Mo Harris.
Emo was in the house.
B. Mo Harris are doing big things in our community, and later on I want to bring up Miss Brittany Keys to just give us a little conversational piece about B. Mo Harris because they've been doing a lot of things in our community for a lot of years, man, and it's just good to see that they have our back. And they came in the snow. I was waiting on the call saying, "Listen, we not doing this."
And the crazy part, Chad, people came to get the money. The money is here, and they
The money in the house now. The
There
money
you
is in the house.
Yes.
So if you're on live, we glad you on live joining us. And I see it's about 300. Oh, it's about 300 people on live. But appreciate y'all for showing up. But what we want to do is we want to talk about your journey right. Just dig into your journey right fast, man. We really want to dig into it and see where you came from. Talk to us about young Will Roundtree, the 8, 7, 9-year-old Will Roundtree, man. Talk to us about Will Roundtree, man.
Man, so like Chad mentioned, I'm from Milwaukee, Wisconsin, and growing up in Milwaukee, we didn't have the moguls. We didn't have the hoop stars and all of that. At least when I was growing up, that we looked up to, and so growing up as a young kid, going into teenage years, I was told by the age 21 I'd be dead or in jail.
Right.
So I really didn't have a lot of choices, but one thing my parents did their best to do is to try to shield me from everything that was going on. I was actually pretty green going into like middle school and high school. Grew up on 47th and Hampton. Went to for my middle school years, I went to Burroughs, John Burroughs Middle School. My freshman year, I went to Vincent High School. Then after that, my parents shipped me to Mississippi. I always say shipped because I felt like I just got shipped out there, man.
Right.
And so moved to Mississippi, and I lived on 120 acres of farmland. It was 3 houses, my grandparents, my uncle, and my aunts. And while I was out there as a teenager, from my sophomore year to my senior year, I mean, I'm out there, I'm chopping wood, I'm shucking corn, I'm picking butter. Like, I was doing all that stuff, but I always say that's where I developed my work ethic.
Right.
And so I often say that was probably one of the best things that could have happened to me. And so, but just like everybody else, I always had aspirations. But one of the things that do stick out, Chad, from of me remembering from my time as a child, I think I always was an entrepreneur.
Right.
In middle school, my moms would go to like Sam's Club and buy bottles, like packets of candy and Snickers, and I would go to school and sell them.
Wow.
You know what I'm saying? At 11, I was a golf caddy. I remember going out there, being a golf caddy, you out there for 4 or 5 hours for a whole round of golf, and I was making $11, $13 for 5 hours of carrying golf clubs. I mean,
Right.
My first job, my freshman year, I worked at George Webb's in Menominee Falls. So my work ethic started at a very, very young age, man.
And that's key, man. One thing I like to focus on our community because I can speak from it because I grew up in it, is sometimes we can make excuses for things that we don't have instead of making efforts for things that we can have. And I think it's extremely important that we begin to turn our thought process into making efforts instead of making excuses.
Correct.
I think that's extremely important. So once you get out of high school, talk to us about coming from high school into manhood. What was that process like for you?
I was lost. I think like anyone else, one of the things that I've learned just on this journey, coming when I was coming out of high school, when you graduate out of high school, you think you know everything. And I remember right at graduation, I didn't know what I wanted to do. I actually thought about joining the military. That didn't work out. Thought I was going to go to college. So the day of my graduation, I actually moved back to Milwaukee. It was May 25th, 1997. I didn't know what I wanted to do for college, and I actually ended up enrolling at MATC to go for computer programming. And I can remember going to school. I was actually taking just some basic classes, was in my economics class. And I remember being in my economics class one time, and the economics teacher was giving us a lesson on money.
Right.
And I remember he started talking about his failures and how he's filed bankruptcy. And he basically was like venting to the class, and he told us he didn't know what to do with his life. And so I'm sitting back, and I'm like, scratching my head. And normally I'm not a vocal person in class.
Right.
And I remember raising my hand. I was like, so you can't teach us to be wealthy? He said, no. And I actually dropped out of school that day. Never went back to school. Because one of the things that I started to learn is that, this whole American dream, it's really about money.
Absolutely.
Like, they sell us a fallacy of a mirage, but it really boils down to money. And so when I learned at that time that he couldn't teach me what I was aspiring to, because again, I had that itch in me as a child because I was selling candy.
Right.
I was, helping my grandfather when I was living in Mississippi and doing odd and end jobs for him. So I knew I always wanted to make money because I can remember seeing my parents struggle.
Right.
I often tell people, Chad, we used to play a game called Beat It to the Bank. You ever played that game?
Not at all.
You didn't?
Uh-uh.
Okay. So the game Beat It to the Bank is when you get paid and you hope that the bills come out and take the money before.
The bank, yeah, I got you.
And so growing up, I didn't want to be in that position.
Right.
And so I always knew that the only cure for that is money. But here's one of the things that I've learned on my journey, and I'll bring it back. We've made being poor a novelty.
Absolutely.
Like, we made it and we come up with these sayings to be poor. And I started telling people that we think poor has to do with economics. No, poor is an acronym that stands for passing over opportunities repeatedly. And so we continue to put ourselves in these situations, and a lot of it is because we don't have the information.
Right.
You know what I'm saying? And
Right.
so and it's almost like you're demonized for wanting to make money these days. Even though we'll brag about our favorite entertainers, we'll brag about movie stars and all of this stuff, but when it comes time to Chad think he all that, Will think he all that. And so, no, I didn't want to be poor growing up, man.
Right.
And so from there, and after, I quit school, I didn't know what I wanted to do at the time. I just knew that I didn't want that plan,
Exactly.
and I knew back then early, like student loan debt. So it was just like everything. I often tell people, we always think that things happen to us, but no, things actually happen for us.
Right.
And I can remember knowing, like, every time that I hit a brick wall, it was because it was preventing me from getting into something that I wasn't supposed to get involved in. And that's the thing I think a lot of people don't look at. Like, even like just the adversities that I've always been through, I've always said, okay, what can I learn from this situation?
Right.
I never why me? And I think once people kind of shift that way of thinking, their whole life will change.
That's a fact.
You know what I'm saying? And so those are some of just the many lessons that I learned, early, graduating high school, becoming a young man, and becoming an adult.
And give me that poor acronym again.
Passing over opportunities repeatedly.
Passing over opportunities repeatedly. We do a lot of that. We do a lot of passing over opportunities a bunch of times. So I'm glad you pointed that out. So now you're moving forward in manhood, and I remember in your story, you became homeless.
Yeah.
Talk to us about that.
So, after, I was out in Milwaukee trying to find my way. Well, let me back up a little bit. So I remember in 1997, I started working at this company. Actually, it was out here, the Kohl's Distribution Company. I used to work out here. Now, I'm 19 years old making $25 an hour. Chad, you couldn't tell me nothing.
I know you was filthy rich in your
Bro,
mind.
you couldn't tell me nothing, man. But I blew all the money. You know,
yeah, for
I
sure.
had no financial discipline.
Right.
And so I can remember working there. I was there like 7, 8 years, and then eventually the company shut down. And so didn't know what I wanted to do. I had dropped out of college, really had no real skills. And I remember, you know, taking odd and end jobs. I remember I worked at Tombstone Pizza. You know, I'm stuffing frozen pizzas, you know, working third shift. And I actually ended up having to move back in with my parents. I was 24 years old. And I remember I was just at a low point in my life mentally when I'm carrying a big screen TV into my mom's house and I'm about to be in the basement. So I'm like, man, I don't want to date. Like, I can't bring nobody to
Your mama house, right?
You know what I'm
yeah.
saying? And so, but, you know, going back to that statement, things don't happen to you, they happen for you. All those things is really what was preparing me to be where I'm at today.
Absolutely.
And so after that company shut down, I actually ended up getting involved into network marketing out here. And I was enrolled in a company. And the thing that I took away from that network marketing, which a lot of people may not know, is MLM. I was out, you know, doing direct sales, but it taught me personal development. That's really what changed my life.
Got you.
You know what I'm saying? And I tell people, if I was still at Kohl's, I was focusing on a retirement. And as we see what's going on in the economy now, ain't no such thing as a pension.
At all.
You know? And so all of those things, and I didn't look at that as like, man, why me? It was just like, okay, it got to be something better after this. So every time a door closed in my face, I'm like, okay, it got to be something better.
Right.
So I just got to keep moving. But that's where people get stuck. Something happens, and they just stop. And that's when I started to learn that. That's because we operate too much in emotions.
It's a fact.
And once we can eliminate that, and I was talking with my team about that last night, because they're like, well, how do you operate in a place where you don't let things bother you? Because I said, because anything that happens to me, Chad, is temporary. If you stub your toe, how long does that pain feel?
Momentarily.
It's instant.
Right.
But we dramatize the feeling of it. And that's the exact same way how we do our lives.
Right.
And so I warn and I look for things that I'm like, okay, why did this happen for me? And then I find the lesson. And I tell people I failed 70, 80% of the time. People always saying like, man, like, what did you do to become successful? I failed a lot because I find the things that I was supposed to learn. And a lot of the times you fail in something, which I call it an experience, because that's something you ain't supposed to be doing anyway.
Right. Or you're supposed to be doing it at a higher level. You just got to keep taking your lumps until you can get to that.
You have to
build that the strength up to get there. So I agree 100% with that, man. And that goes with in any field. That's the same way in the music field. I'm talking about, man, I done did so much free work, it didn't make no sense. But then when it was actually, and I considered it as practice.
100%.
So when it was fourth quarter, time to make that shot before the buzzer in the studio, so to speak, I was able to produce because I had the muscle memory from doing it over and over and over and over again. So when I was in the studio with local artists, but then I got into the studio with the big shots, I was ready to play ball because I've had that practice and that muscle memory. So I agree 100% with you on that. So now that we've taken our lumps, what brought us to Will Roundtree, who we are today?
So I can remember there's been several journeys. And so I remember going back to 2003 when I was in one of these network marketing meetings. I remember I was sitting in the front stage, and I'm sitting there. I got my arms crossed. I got on some baggy jeans because, you know, we wore baggy jeans.
Super
back
big,
then.
triple the size. Yeah,
had some Timbs, a long T-shirt. And I can remember the gentleman in the front was like, hey, you may want to take some notes. And I was like, no, I'm straight. And then he stopped what he was doing, and he singled me out. He was like, you know, being cool going to keep you broke. And that stuck with me because I was always straight. But I wasn't, because he's up there teaching me about how to make money, and I'm there and my account was in negatives. You know what I'm saying? Like my car was overheating driving there. And so I was like, man, I got to do something different with my life. And a lot of the times, you know, I think we tell ourselves we're fine because we've normalized pain.
Right.
And people often say that they're straight because it's a defense mechanism. Like the average person is dealing with a lot of trauma.
Agreed.
And you can't, and the brain can't depict a feeling or pain, or they don't know what negativity is. We've told ourselves that something is negative. And with that being said, that's why we can't differentiate pain. There's a pain for discipline, and then there's a pain for like the regret. And I remember being in that front row, and I was like, man, I don't want to keep going down this path. I'm 24, going on 25. I'm living in my mom's basement. So I was like, I have to do something different. And when I started to learn, we always say the definition of success is doing the same thing over and over, expecting change. But then I started to learn what the definition of insane means. That's someone who can't think logically. Right. We think somebody who's insane is somebody who's like banging their head on the wall. No, if you don't think logically, you're an insane person. Right. And at that time, I wasn't thinking logically because I'm like, why would I not listen to somebody that has what I want?
Right.
So I had to start being a student of life. And we've developed this like defense mechanism where we think everybody always trying to get over on us. And so, but I know that that's our trauma. And so developing to who I became, I remember I just started seeking out mentorship. And so as I'm studying, I started to learn what is the definition of a mentor, or what is the purpose of a mentor. And a mentor really has four things that they're supposed to teach you. They're going to educate you. They're going to, hold you accountable, help you to mitigate your mistakes, and teach you personal development. And it's up to me to do the work to get to the actual end result of that goal. And so I sought out mentors, and I started reading books and started doing all of these things to really change the way I started to think. And so I remember I started, having a little bit of success in that network marketing organization, and my mentor came to me at the time and said, Will, do you want to move to Las Vegas? Because we're building a team. And, so at the time, single, no kids, I'm like, absolutely. But I didn't have any money. And so he actually loaned me $500. He was like, look, I'm not going to finance your lifestyle. It's Las Vegas. But
Right.
I give you $500. You got to figure it out yourself. Are you up to accepting that challenge? So can you imagine someone who had to completely uproot everything that they knew here in Milwaukee? I was comfortable living in mom's basement. Well, I wasn't comfortable, but I was comfortable.
Yeah.
Because that wasn't my rock bottom yet.
Right.
And I say that because a lot of the times people won't get to that next level because they won't let their rock bottom happen. You have to get to a point to where the uncomfortability is what changes you.
Right.
And rock bottom is different for everybody. So because I was still able to sleep on my mom's, their couch in the basement, that wasn't rock bottom for me yet. And so when I moved to Las Vegas, I found out what rock bottom was. $500 doesn't go far.
Right.
And so I was, so moved to Las Vegas 2005. Was renting a room from someone who was a part of the organization. That didn't go well. And next thing you know, I'm finding myself, literally sleeping in my car. But the thing and the irony of all of that, Chad, I never felt poor. And I didn't because I knew the opportunities that were ahead. I just had to keep going. And so I continued to practice on being a better person.
Right.
And that's really, I often tell people, that's what separated me. And this is like a 20-year journey for me. This just didn't happen overnight. So it wasn't the X's and O's that got me here.
Right.
That's what I often like to tell people.
And I think that makes sense because a lot of times we are fooled by, especially in today's society, by the X's and O's. We're fooled by that because we spend time seeing other people's highlights and not their real life. So I think that's an extremely important point to make because, especially the younger generation behind our children
Definitely.
and their friends, they think that what they see is what they get. When realistically, when it's truly a success, it took time to get there. They like to say success doesn't happen overnight, or this happened overnight.
Right.
If that happened overnight, it was a long night. You know what I'm saying?
Definitely.
So now you
Can I
start
say
working
something to that point?
Yeah, absolutely.
It's interesting you say that because I often tell people life is all marketing. when you're dating somebody, what are you doing to that person?
Yep.
You marketing them.
Yep, absolutely.
You know what I'm saying? And so, and once I started to learn these things called concepts, that's really what changed. These are all of the things that changed my life. So you start to learn, like, yo, everything is marketing. Fellas, we put on our flyest outfit because we're marketing to somebody.
Yep.
Women, you put on your flyest outfit, get your hair done because you're marketing. And so when we get caught up in the trappings of marketing, because a person isn't going to show you when they losing.
That's a fact.
You know what I'm saying?
And to me, that's the point they should show you, because that's the point where everybody can learn the most.
And that's why I talk about my struggles more than anything.
Right.
That's why I wrote the book, Full-Time CEO. I talk about the things the unglamorized side of things. I tell people I fail. I tell people I've been homeless. I tell people I've been sued. I tell, like, anything, everything that you can think about negatively that's happened to an entrepreneur, it's happened to me. I tell people I can't spell. Because I want people to know I'm human.
Right.
And you don't have to be smart to be successful.
Right.
But once you understand that the definition of success is an accomplishment of an aim or purpose, has nothing to do with money.
They're facts.
You know what I'm saying? So if I say, hey, I'm going to read a page a day out of a book, you're successful because you accomplished an aim. And so once you start learning these different concepts in life, you remove the pressures of trying to fit into the marketing that everybody else is doing in life.
Right. That makes sense. So now let's get into it, man. How did you learn about the credit game? What made you get into that area? What made you even think about that even discover that process?
So I can remember before I moved to Vegas, one of my mentors I had met at the time, he said, Will, eventually credit will become the new dollar. He told me this in 2003. I didn't even know what he meant by that. And of course, you know, I moved to Vegas. I quickly found out. Couldn't rent an apartment without putting down 3 times the deposit. Couldn't buy a car without a cosigner, like all these different things. And I never wanted to call my parents and ask them for anything. So I just, you know, as they say, we thugged it out.
Right.
And so as I'm continually going through these cycles of financial disappointment, I said, I got to do something different. And so I said, you know what? It got to be something to this credit thing that he told me about. And I remember one of the times I went to the car dealership and I got denied for like the 15th time. I was like, can I get a copy of my credit report? So he gave it to me, and it was like a 400-something credit score. And I didn't know what that meant. I'm like, okay, is that good? Is it bad? And I just remember going on there seeing, like, I had a judgment because I had the vehicle I had here in Milwaukee, it got repossessed. I had loans with, like, all the payday loans. Like, anything negative, I had it. And so I started to research more and more about credit. And then I remember started learning more about people like Robert Kiyosaki, who talked about leveraging other people's money. But you can't leverage other people's money without having good credit. And so I remember just going on this quest. And back then, there wasn't like YouTube, like none of that stuff really existed, or it wasn't as popular. And so I would go to the library and just read on books on like consumer law and what credit is. And I remember I started doing things to actually start working on my credit. It took me like 2.5 years. I actually posted videos of my old credit report on my social media not too long ago, and it blew people's mind because they assume, you know, people who got good credit, you born like that. No,
Right.
like you have to develop into that.
Work for it. Yeah.
You got to work for it. And so as I started to learn more about credit, then I started to learn the importance of it. Then I started to learn the power of it. And I actually have a theory why they don't teach our communities, especially about credit. Because think about like this. Once I started to learn the power of credit, because we've been conditioned to look at credit solely from a consumer standpoint.
Absolutely.
And so they want you to go out and overspend on a
yeah,
house.
yeah,
they want you to overspend on that car you can't afford. They want you to buy clothes with your credit cards.
Right.
Because they know that they use their credit to buy real estate.
Yep.
They use their credit to buy buildings and hotels. And so in order for them to get an advantage against certain communities, no, they give you, no, this is what you use credit for. So there's been such a misconception of what credit and what money, and we've made these terms that money is evil and like all of this stuff, but it's because of the lack of information about it.
Right.
And so once I started to learn that it was really a power in credit, like when you have great credit, that is your Powerball number. And that's why I talk so much about why you have to change your mindset and understanding economics. We don't understand economics.
Agreed.
It's not about just knowing, okay, I work and I make X amount of dollars. No, we don't understand economics, and credit is a part of economics. And once you start to learn that debt is what makes people rich.
Facts. That's a fact.
Debt is what makes people rich.
Perfect example is the government right now. The debt ceiling.
It continues to increase that's by default.
By default, right.
They tell us to be worried.
Right.
But they're not.
They keep raising it.
They keep raising it.
Yep.
Because that's how you make money.
I heard a statement, if I borrow $1 million, I'm in trouble. If I borrow $500 million, we're in trouble, meaning me and whoever loaned me the $500 million.
Yeah.
So the people that got the $500 million is going to figure out how we can get this money. So that makes all the sense in the world, but that's not taught in our community.
It's not, because we're taught that you work for 8 hours and you get $10 an hour.
Yeah. It could be $100 an hour, but the thing is you have to be there.
You got to be there.
How can you make that if you at home sleep?
And so when I started to learn, again, these different financial concepts, I made it my business, because usually you get paid based upon the business you mind.
Yep.
To learn everything I could about credit, to learn everything about debt, structured debt, that is.
Absolutely.
Because we are only taught unstructured debt, buying stuff we really can't afford. And so once I saw the positive impact, I was able to get my first vehicle without a down payment. It blew my mind. I was able to purchase a house. Coming from Milwaukee, I didn't even think it was possible for me to be a homeowner, because that's not something that was taught.
Right.
Growing up, we think we're
rent.
Forever, and then we're told, I don't want to own a home. I gotta, what I'm saying? Like, we've been conditioned to stay poor, and we come up with our family come up with these cute sayings, and so once I started to see the positive impact it did for me, I was like, man, I want to share this, and not from a business standpoint. I just want to tell people, like, yo, Chad, what's up with your credit? Do you know that? But then I started to see how people reacted. Why are you asking me about my credit? That ain't none of your business. Right. Like, people get offended.
Yeah.
You know what I'm saying?
That's a fact.
And so I was like, I have to figure out a way how I could share this. And it really almost became a purpose of mine. And so it just kind of happened by default.
That's powerful, man. And I think when we actually find what our purpose is in life, we go hard at it. And we go, so it's like, I can use the church analogy, when somebody has done things in life and then they actually find God, and they want everybody to find God like they found God. But it's impossible, because we all have different areas in life that we struggle with.
Absolutely.
So if I wasn't a drug addict and then that person found God and got clean, I may not have the same enthusiasm as they, because all I did was cuss. You know what I'm saying? Yeah. So my enthusiasm may not be as big as theirs had been, because I didn't go through as much as they went through.
Definitely.
So I think when we remove the stigma of ego, the ego of our credit, good or bad, I think us as a society will literally start to latch on. It's getting popular now, and it's getting popular because of social media. You got all of these different people doing credit this and credit that, but they're teaching one side of it. They're not teaching you how to leverage it. They're just teaching you how to clean your credit up, to go do something else, to mess it up, then to go get it back fixed again, as opposed to taking it that one time and using it as basically your tool to life. No. And I know that's what you do. So that's why I had you come, because I wanted you to explain how you take that tool of your credit. Because I remember you used to always say this to me before you wrote the book, Credit is King.
Right.
And you wrote that book, but you said it way before you wrote the book.
Yeah.
And what does Credit is King mean?
So, of course, shameless plug.
Man, come on, plug that thing, man. Plug that thing.
So, a little bit about this book. I remember in 2015, a friend of mine who has a publishing company, who actually was the publisher of this book, Jackson Publishing, he said, Will, you should write a book. And I was like, what I'm going to write about? He was like, man, just write about what you know. And I was like, I could talk about this credit thing. He was like, do it. And I was like, I don't know, because I don't want it to be just like a how-to.
Right.
Because I think when it comes to how-to, I just think that I don't know. I was just like kind of standoffish about that. But I was like, you know what? I'm gonna write it from my perspective, but I want to do it kind of more like a manual where I'm actually teaching people in the book. But not only that, I want them to learn different terminologies on finance. I want them to understand how to deal with collection agencies, how to build their child's credit. And so I wrote the book, and I literally had no expectation. And I can remember I was actually still working my 9 to 5 at the time. I would be up after work, and I was typing this book, and it actually took me about 6 months. And when I released the book, or before I released the book, I didn't even have a name. And I said, you know what? I'm going to call it Credit is King. And I said that because credit really is better than cash. And a lot of people will fight me on that. And I'll say, okay, let's say you got $200,000 in the bank, all right? And I have $200,000 in credit. You go spend that $200K on whatever. You're out of $200,000. Where are you gonna get another $200,000 from?
Right.
But me, I can go to another bank, get another $200,000 in credit. And so I was like, man, credit is king because that's really like the loophole between the gap of the wealthy and the unwealthy because they understood how to leverage a game called credit. And so when you think about almost every successful entrepreneur and names who we are all familiar with, they use what? Other people's money.
Right.
And so that's where really the whole reference of credit is king. And I do own the trademark, so if anybody try to use it,
get you a check.
My attorneys, they watching. Right. They definitely watching. But
right.
but so yeah, so I really was just trying to show people like, yo, like this thing called credit, it could really save your life. It changed my life. Mm-hmm. You know what I'm saying? And I didn't leverage my credit to go out there to try to get fly. I used it to create a lifestyle. But the lifestyle was created by what I leveraged my credit from. And I was starting businesses, investing in real estate and different things like that. And so that's really where the whole turn came from.
Now, people sitting out here today want to know, how do you start getting your credit together? So let's dig into the toolbox of yours, and let's start giving them information on how to get their credit together.
The first thing it starts with, you got to get out of denial. Mm-hmm. I think a lot of people are in denial, whether it's because they're scared, they're nervous, or whatever the case may be. Because we have to overcome that stigma of financial trauma. Mm. You know what I'm saying? Like, I've been to people's houses, and they parents will, like, they'll come to me or my team and be like, yo, we want to get our credit fixed. Let me go ask my husband or my wife, what you want to get your credit fixed for? So it's like we have normalized staying in broken situations financially. And that is because there's not enough education, or we only know one side of credit, and that's the consumer side. Right. And so, or people will be like, oh, well, I don't want to be in debt and this and that, but everything around you is in debt. Mm-hmm. You know what I'm saying? And right. So the first thing is really getting out of denial. And so now, once we've overcome that, now we have to figure out what the issue is, why your credit is the way it is. And I always tell people that because there's a lot of people selling fluff about how to put yourself in a better position from a credit standpoint. Right. So like one of the strategies that is not a good strategy is people say, oh, go get some trade lines. First of all, people are using terminologies that really, like a trade line is really anything that's reporting in your credit report. The correct terminology is what's called an authorized user. Right. And so I'm going to give people the good and the bad because I want you got to know both sides of the coin. Right. And so the average person who has bad credit, the first thing they'll do is they'll go ask somebody to add them on as an authorized user. And essentially what an authorized user is let's say you have a credit card for $10,000. Mm-hmm. And it has great payment history. You have no balance on there. You can pick up the phone, call your bank, and put me on as an authorized user. Mm-hmm. You don't have to give me the card unless you want to, because I know you got some healthy limits, Chad. So you can add me on as an authorized user. Now your credit history will report on my credit report. Right. Now here's the downside to that. If that is not what is negatively impacting my credit, you adding me on isn't going to help me. Right. Especially if I have $20,000 in bad credit card debt already, or I have a repossession. Mm-hmm. And so people are selling people on things because it plays off of their fears of a quick fix. Mm-hmm. And that's what's hurting the communities and why sometimes people in the credit space get a bad name, because it's an easy industry to take advantage of people. Right. It's a quick money grab for a lot of people in this space. And so knowing what's impacting the credit. Then once we know that, I tell people you got to understand what are the 5 components of what makes up a credit score. 35% is payment history, meaning do you make your payments on time? That's probably most people's issue when it comes to their credit. They don't have bad credit, they just don't pay their bills on time. Or they got a late payment or some type of mishap, because one late payment can drop your score 150 points or up to.
Right.
30% of your score is credit card utilization, meaning how much do you have in credit card limits, and then what is the balance? Anything over 30% of the total limit, your score drops. So if you have $10,000 of credit cards limits, if you spend over $3,000, your score drops.
Right.
You'd be surprised how many people don't have bad credit. They just need to pay their credit cards down.
Right.
And then the flip side of that, you'll have people who don't believe in having credit cards because it's debt. If you don't have credit cards, you miss out on what makes up 30% of your score.
Right.
So your score can only get to a certain point
Yep.
because you're missing what makes up 30% of that. Another thing, or another side of that, let's say all you ever had was an auto loan, okay? You're making your payments on your auto loan. You've had it 3 years. You finally paid it off. Now your score just dropped because the only component of what made your score was payment history.
Yep.
And you just essentially close that account. So you have to know all the different sides. And so that's why I try to teach people about credit and not just fix their credit. I don't even like being called a credit repair guy.
Exactly.
Because I'm really an educator. It's deeper than that. I'm an
Yes.
educator. Like, I'm really trying to educate you. And that's why 60% of people who usually get their credit fixed end up back in the same situation. But that's the hustle of the industry. I need you to keep coming back, Chad.
Right.
Because the bad credit repair person is a one-trick pony.
Right.
So, no, I don't want you to know everything. Go out there and rack them credit card points up. Go buy a car you can't afford because I know you're going to come back. But if I educate you, you're not coming back for me to repair your credit, but you may come back so I can help you grow in life. And that's, by leveraging your credit to grow your business or invest in assets or whatever the case may be. So the next thing is knowing how to deal with collection accounts. Some people who have items that they haven't paid and not knowing what to do. Here's something that most people don't know. You shouldn't pay your collection accounts without knowing what to do. And if the debt has been sold to a third-party collection agency, technically they don't own that debt. So you don't owe them no money.
Right.
But you just have to know the laws and what to use to be able to fight them. And when you dispute it, if they can't prove the debt down to the penny, sending the right type of documentation to forcing them to saying, hey, show me proof that I owe this debt to you. And if they can't, they have to delete it off your credit report. Now, it doesn't mean you don't owe the money. It just means from a credit standpoint, it doesn't impact you negatively. So this is why I tell people, don't pay a collection account. Another thing, bankruptcies. People are scared of that B word.
Yeah.
The bankruptcy.
That's a fact.
But here's the thing that I started to learn, Chad. Bankruptcy is really just a strategy or a concept that wealthy people use to protect their assets.
All the time.
But unfortunately, our communities or the poor communities have been convinced to use bankruptcy as a get-out-of-debt-free card. I've seen people file bankruptcy for a late payment.
That's crazy.
But they do it because the attorney hustled them because they need you as a client.
Right, they want that $1,500, $2,500 to do it for you.
They want it.
Right.
And so a lot of organizations have monetized the trauma of our communities, and this is why I continue to educate people. No, you file bankruptcy if your wages are being garnished because your income is your asset at the time. And so we have to start learning, what is credit repair, how to effectively do it. I have sample letters in my book, Credit is King, which you can get on Amazon, by the way. And so you have to learn both sides. And then once you really start to see the power of having great credit, like I tell people, your credit score determines the school zone your kids go to school in.
That's a fact.
Because if you can't pass a credit check to live in a more affluent neighborhood.
Yep,
you gotta live where they will accept you. Right. Your insurance rates.
Yep.
And we know how insurance rates in Milwaukee are.
Crazy. Yep.
Crazy. Yep. But it could potentially also be contributed to your credit being in a bad position. I remember there were parents who couldn't rent instruments for their children who were in the band because their credit score was bad. And then here's the flip side, because we always think, oh, well, I got cash, I don't need credit. I don't care how much money you have. There's some banks that won't do business with you
Yep.
without checking your credit.
Yep.
And so once you start to notice those things and know that no matter where your credit is at, how bad it is, how damaged it is, it can always be repaired. It may take time. It may take 2 years like it took me 2.5 years. But that's just the process you have to be willing to go through. And stop trying to get these quick fixes and these little credit hacks and these little stuff they say on TikTok and all of these things, because all that stuff is temporary. No, you gotta be willing to go through the right process to make sure that foundation is properly laid.
Now, once you have your PG personal guarantee, your personal credit right, how can you then take that if you're a small business? Because I know we got a lot of business owners in here. If you're a small business, how can you take your personal credit or your personal guarantee, as they like to call it, and use that as leverage to go help finance your business?
So this is probably one of my favorite parts because, over the past 5-6 years, I've helped over 5,000 small and medium-sized businesses get hundreds of millions of dollars of funding and capital. And again, going back to that book of Robert Kiyosaki where he talked about leveraging other people's money. And I remember he said he bought his first investment property with a credit card.
Yeah.
Blew my mind, Chad. And I was like, man, I got to figure out that concept and that strategy. And they said that if you want to hide something, you put it where?
In a book.
In a book. So I went to go find every book I could so I can extract that information.
Right.
And so when I started to learn that there are strategies and concepts that we have not been privileged to, because most small businesses, when they start a business, the first thing they run out there to do is try to get a business loan.
Mm-hmm.
And here's why most businesses will never get a business loan as a startup. Statistically, 9 out of 10 businesses fail.
Yeah, right.
And so the bank isn't willing to take a gamble on. They don't
Whatever.
know what we do.
Yeah, they don't know. Yeah.
Obviously, 9 times out of 10, we have no business experience. We don't have a business plan. We just have an ideal and some passion, And then if you don't get the money, that passion leaves very quickly.
Immediately. Yes.
Immediately. And so, but what I started to learn is that a lot of entrepreneurs started using what's called creative financing by leveraging secured debt. Mm-hmm. Meaning, you don't go into the bank and ask for a business loan. You can build your business using lines of credit. And when I started to learn that, it blew my mind. And so I remember I went out there at the time my credit was fixed. This was around 2013, 2014. And I had got about $47,000 in credit cards. And I'm like, man, okay, how do I use this? And I said, oh, wow, I could use this to pay for my LLC. I could use this to pay for my business license. I could use this to pay for all my business card, all of my startup costs. Mm-hmm. Because the average business, you could start for less than $5,000. Right. And then when I started to learn about the economics of how money works, see, this is why most people lack ambition or the passion about trying to start a business. Man, where I'm gonna come up with $5,000 or $10,000 from?
Right.
Because 75% of black and minority families don't even have over $500 in savings.
Right.
So how can you say, okay, go start this business and you don't have $5,000? And so when I started to learn how I can leverage revolving credit, i.e. credit cards, business credit cards, personal credit cards, and then let's say I get approved for 10, 20, 30, 40,000, and then my startup cost is 5,000. I'm not having to pay back the full 5,000.
Right.
I only got to pay back the debt servicing on the $5,000, which it may only cost me $75 a month.
Right.
So now I'm not focused on breaking my back trying to make 5,000. I only got to focus on serving the debt on $75. Right. And when I started to learn those little bitty concepts about economics, then you start to learn that 98% of the top Fortune 500 companies operate on debt.
Nearly all of them.
Except Apple.
Apple, yeah, because they got cash. They liquid,
got cash,
Microsoft.
Microsoft, couple of them.
Majority.
Yeah.
Yep.
Yeah.
You're right.
So once I started to learn that, I'm like, dang. So I can go out there and get lines of credit and run my business. It's over. And so I really started to learn that. But then you have to have a level of discipline.
Yes.
Because you take somebody who's undisciplined and you give them a line of credit for $50,000. Right. It can get pretty bad.
Fast too.
And so, but that's where my mentors who taught me about, accountability,
Yeah.
who taught me to be disciplined, who taught me, all of those things. And that's why you also have to learn just about money because, it's something called debt servicing that most people aren't familiar with. You have to, if you go out and get this credit, you have to have something that's going to pay the debt on it.
Right.
And the reason people are scared of debt because we go and get into consumer debt and our income can't support it. And so now there's a misconception of like, oh, no, I don't want to do that credit thing because I don't. No, debt is what you use, but you just have to find a vehicle that's going to pay it. And so this is what I tell people, Chad. When it comes to growing your business, you want to have banking relationships. That's why we have BMO Harris here, because imagine being a brand new business. Your LLC paperwork ink is just freshly dry, and you can walk into the bank. You have a good credit score, and they give you a business credit card for $25,000. What could your business do with that startup cost?
Right.
I can maybe hire a VA. I can, pay for my business license. I can pay for a small marketing and branding campaign. Those are the things that's going to continue to keep my business thriving and starting and help and getting in front of customers. And so just learning those different strategies and concepts, man, that's how I've been able to grow my business, by really just teaching people everything that I went out there and failed my way to figuring it out.
And that's the key, man. It's not just knowing the information, it's sharing the information.
Correct.
And a lot of times we have information, we have knowledge on whatever particular topic, but we don't like to share it because we feel like if I give it to you, you're gonna do it better than me. When realistically, when you share that information, they're never gonna do it just like you.
Right.
And that's what we gotta learn in our community. If I know how to do something, teaching you how to do something does not take away from me, from my financial gain of that.
No, not at all.
And I think it's extremely important that we talk about financial discipline. So once we're able to get the credit, whether it's personal or business, how do we? What is the discipline, and how do we use it?
So whenever I'm sitting down with people, the first thing I'm always asking is, what is your end goal? And you'd be surprised. There's a lot of people want to get credit just to say, oh, I got a credit card. And I'm like, I choose not to even work with people who are like that. I want to work with people who legitimately want to figure out how to improve their life, improve their families' lives, improve, the financial dynamic structure of their life. And so once I find out what their end goal is, then I help them put together a plan of being able to change that. And the first thing I'm always mentally preparing them for, Chad, is letting them know this is going to be hard.
Yeah.
But the hard part is because you're going to have to unlearn everything that you've learned up until that point. Because some of the things that I'm going to possibly share with you is going to go against everything that you've been taught up to this point. Because of the reference points we've gotten in our lives. Typically, who were people who taught us about money growing up?
Our parents.
Which a lot of times they didn't have it.
Right.
So we have been operating in a place of doing things that didn't work for our parents, their parents, and the many generations prior to.
Right.
And that's because there was no incentive of them learning that stuff, because they didn't want our parents to know this stuff. They didn't want our grandparents, because if they did, we wouldn't be abandoning our neighborhoods right now. Right. We would be the owners of our neighborhoods. Right. And so once I find out what it is, what their end goal is, then we put together a plan to actually help them to lay the foundation. Okay, so your personal credit has to be intact. And I always say that because there's a lot of credit hacks on the internet where they're saying, hey, let me help you get business credit and you can have bad credit. That does not exist. The credit they're helping you get is like store credit.
Right.
It has zero value.
Right. A gas station card.
Yeah, gas. Yeah, no,
right.
no.
You can't buy a house with a gas station
You
card.
cannot. And so I have to help them unlearn those things. But here's why I think people buy into that stuff, because it's easy.
Yep.
And when you're operating in a place of desperation economically, you only want to do what's easy.
That's a fact.
Because if I say, okay, Chad, this is going to take 2 years. Oh, no, let me just go do these things that. Because anytime people think the needle is moving, it feels like momentum, but it's not. And so that's why I say I have to help them to unlearn all of the stuff that wasn't working for them. Right. And so We have good credit. Now we're going to go and set up a business entity. See, banks are willing to always leverage, revolving debt to businesses. Why? Because only way a bank can stay in business is by what? Them lending money.
Right.
But again, the loophole, or I always say the strategy, because when it comes to knowing how unsecured revolving debt works, they lend that based upon several, data points like household income, projected income, and different things like that. Versus the reason you don't get a business loan, one, you don't have financials, you haven't filed taxes. Like there's a multitude of things. And so once now we help them get that, the first thing I'm looking to tell them is like, now we have to put together a plan on using this. And typically I want them to be able to either park it into a business that's already making money, or we're going to use it to grow your business, but our focus isn't looking like a business owner. Our focus is getting a client. Right. Because the only way you can get a client is by getting in front of people. So, yeah, we're going to put together a marketing campaign. We're going to put together some branding. We're going to, not lifestyle branding, but some real stuff that's going to draw a customer. We may have to restructure your business. Does your business suck? Some people, sometimes you got a business model that doesn't work for somebody to want to come and do business with you. Right. And so there's so many different things. It's bigger than just getting the credit. I like real estate because I think that real estate is one of the easiest entry points of creating long-term wealth. I can take this credit and invest in something that's going to pay me forever.
Right.
And here in Milwaukee, I tell people all the time, Chad, this is probably one of the best markets in the country because there's very few places where you can invest $20,000, $30,000 into a house and make $1,000 a month.
Right.
And so can you imagine using your credit to invest in some property that's going to always pay the debt? And forever. Yep. But then after the debt is paid off, you still own the house that's still paying you. Right. So it's just so many different concepts and strategies that I like to teach people when it comes to learning how debt works. And that's why I call it structured debt.
Structured debt. That's amazing, man. I was DJ Envy was talking about people comment on how many vehicles and things that he has. But he explained in detail that he doesn't just buy all these cars that he has. What he does is he creates an asset to pay for it. And people think a lot of times when you see people like, I just use Envy because I remember having a conversation with him. He was specifically talking about that. So that should be whatever your lifestyle is a month. I think the best way to do it is create an asset to fund that lifestyle.
Absolutely.
And speaking on real estate, that's a fast. I don't want to say fast. That's a bad term. That's a more traditional way to do so. So, trying to get into the real estate game, leveraging your credit or leveraging the strategic debt that you said. How do our viewers and our guests start that process?
Yeah. So before I jump into that, so a couple weeks ago, I actually went to the Mercedes dealership, and I was looking at some other cars. And I buy cars, and I make them assets.
Oh, yeah.
And then my real estate pays for the car. Will Roundtree doesn't even own the cars. My companies own them. And then I rent my cars out, so the rental income pays for the cars. And so I like that model because when I'm talking, so anytime I'm leveraging debt, it's because it's always going to make me money. And so from the real estate standpoint, this is how simple getting into real estate is. And I think people overthink it. And I think they overthink it because the numbers are large. And it's really not as complex as people think it is. Now, there's some other like nuanced strategies that can help people to be a more proficient investor, which is what I teach people. But here's the basic concept. So you take your good credit. You take your company, your LLC, you go to BMO Harris, and you get a line of credit. Let's say they give you a line of credit for $50,000. All right, boom. Now, I can use a portion of my credit, and let's say I find a property out here in Milwaukee, Wisconsin, that's $100,000. That's about the going rate on average now for an investment property. Now, no matter what zip code that property is in, let's take 53206, the zip code that a lot of people were scared to invest in.
Yep.
I was buying properties in 53206 for $2,500, Chad. More than what people was getting on their tax refunds. I was begging people, look, let's buy these houses in 53206. No, the neighborhood's bad, this, that, and the third. They now have Starbucks coming up in 53206.
Right.
You know what I'm saying?
Right.
And so, but I saw the foresight because here's one of the things I often tell people. How often will humans need to live in homes?
Always.
Forever. So why would we not invest in the one thing that people have to do? Live somewhere. I don't care what neighborhood it's in. And I was taking my team up and down, like we was on 5th and Locust, and I bought a house off 5th and Locust for like less than $3,000. That's now worth about $115,000 because I'm like, look, people gonna always need somewhere to live, no matter what the house look like. You just have to make it in a condition to make people want your house.
Yeah, to live there, right.
And so imagine finding a property that's $100,000. For an investment property, you only got to put down 20%. So I got to come up with $20,000. I got the $20,000 from my
50.
bank.
Yeah,
I just got 50.
Yeah.
And so the debt servicing on that $20,000 may cost me, let's say, $300. You know. All right. So now I got that debt servicing, $300. Now the mortgage on the property, because the bank is going to finance the other 80%.
Yep.
That $80,000 amortized over 30 years. Let's say that's going to be another $300-$400 after taxes and insurance, $500.
$500, right.
Okay, so I got the debt from the mortgage is $500. The debt from the line of credit is $300. So $800. I just have to find a property that fits that metric that's going to pay me at least $1,000 to $1,200 a month.
Right.
And we know no matter what zip code,
You're gonna pay at least.
$1,000.
Yep.
So I've pre-calculated my numbers. In 53206, this is for 4-bedroom. I'm getting 12 to 15. So it meets my metric of servicing the debt. Plus, I still got some money left over. And so, but here's another reason why I think people are scared of real estate. They're trying to get rich off one property.
Right.
People have a misconception thinking real estate is quick money. And so we have to learn that real estate is your retirement plan. Real estate, true wealth is built slowly, but everybody is so busy trying to look wealthy but not doing the things to actually get wealthy. Right. So they go get one property, barely making any money. They done upgraded their car. They buying different clothes because they want people to want people to know, oh, I'm a real estate investor. No, that's not what real estate investing looks like. Because if your bank account is still negative, you put yourself in a bad position.
Right.
And so it's really that simple. I find a property that's the mortgage with the debt servicing is $900, and then just make sure that the rent is giving me at least $1,200. And I do that enough. Like, I broke down a plan. You take the average person who goes to college, okay? They said the average person with a master's degree, average lifetime earnings is about $2.1 million. Average lifetime earnings. Yep. That means how much they made their entire career with a master's degree. Right. Okay? If you think about how much they've paid in student loan debt, it's typically maybe about $200,000 for a master's degree, maybe a little bit more. If a person went and got and leveraged $200,000 from the bank and invested it in real estate, they would probably have over a $2 million real estate portfolio.
Yeah.
Which will
but
pay
that never
them,
stops.
And it never stops. And it pays them forever.
Right.
So I tell people, if you focused on buying one property a year over the course of 10 years, you will have $1 million real estate portfolio. And it didn't cost you anything out of your pocket because you're leveraging the bank's money. The tenants are servicing the debt. And then as your properties are being paid, you're forcing appreciation because you're paying the mortgage down. Right. And then guess what you can do? And this is a little bit more strategic strategies. Now, if I do need money, I can go and refinance my properties and pull out all that equity tax-free. So let's say if I do have a $2 million real estate portfolio after 10 years, and this is what the wealthy do. They go and now borrow money from their property. So if I can get up to 80% of that $2 million real estate portfolio, I can borrow $1.6 million tax-free.
Now you can go buy a complex.
Now I can go buy a complex because that $1.6 million, it may cost me, let's say, $12,000 to service that debt.
Yep.
I'm making more than that from the rental income.
Yep.
So it's never cost me anything. But your only original investment is fixing your credit. You may have to hire some mentorship and get a coach. and you got to be willing to go out there and actually execute on the information.
And that's key, man. I think that's the key point is
That's the hardest
execution.
part.
Yeah, execution. Ideas are great, but they're just ideas without execution.
Definitely.
So what I want to do is allow the audience, because I do a lot of talking. I got a big mouth. But we got a mic. If you have any questions, we got a mic on this side of the room. So if you want to ask something, feel free to come on this side. I'll continue to ask questions until I see any individuals on that side of the room to ask a question. Because I'm sure you may have specific questions catered to your particular situation, and this is the best time to ask it to Will. So while they're getting ready, when you build a great relationship with a bank or several banks, what's the key into growing that relationship? So you said you started with 50,000.
Yes.
How do you continue to raise that borrowing number?
A lot of times, a couple things. One is actually using the money.
Right.
You show them you're fiscally responsible. The banks want to give you more money. But then secondly, and here's something unfortunately that happens a lot in our communities that we don't do enough of: file our taxes properly. You got to file your taxes because the bank needs to see that your business is transacting business.
That's a fact.
You know what I'm saying? And so these are the other things that I'm always teaching people. But then not only that, people also don't know you can have relationships with multiple banks.
Yes.
You can have multiple LLCs and have multiple relationships with multiple banks. And so even I know, like, with some of the bank partners that, we personally work with, like, you can have multiple companies and they will give money to all of those different companies. So it's about just really knowing, like, what's out there and what's available, because getting the money from the banks is the easiest part. They want to give it away. Matter of fact, banks have money to where they have to give it away. And if they don't, they lose a lot of their lending power.
Right.
So it's just about really being in position, man. And unfortunately, people aren't doing the necessary steps or taking it serious enough to even get in position.
And I think that's key, because if you don't position yourself for the opportunities as we spoke of, then when the actual opportunities start to come your way, you miss them because you weren't prepared for them when they got there anyway.
Because we were poor.
Absolutely.
We were being poor.
Being poor. We got a question over here. What's your name, my brother?
Yo, how you doing? My name's Phil.
Phil, how you doing, bro?
Doing good, man. Could you talk a little bit about the intersection of your personal finances with your business finances, and how they relate to each other, and how that has changed as your business grows and you become like an owner of a more high value asset?
Are you speaking for me specifically or just in general?
I mean, you could tell it through your own personal story.
Well,
Yeah, that would be really nice to hear a good concrete example of how
Okay,
you
definitely. And I think I'm gathering your question. So I can remember in 2012, I was speaking with I was speaking at the time who was my tax person.
Yeah.
And up until that point, every year I was always claiming a loss, because we were always taught to get a tax refund. Hey, if you want to get first, let me put this out there. I might get beat up after this, Chad, but I'm gonna just have to say this. We have to stop living from tax season to tax season.
Man, talk about
We
it.
have to. One of the reasons we're in one of the biggest financial economic demise is because of tax preparers. And I'm going to tell you why.
Why is that?
They've kept us poor. Let me tell you why. Because a lot of them are poor. They file your taxes in direct relation to benefit their pockets. Oh, if I get Chad more money back, he has to pay me more money as a tax person. Well, how do I do that? I'm going to trump up some expenses so you can get a tax refund. Because if I get you $10,000 back, you're going to give me $700 to $1,000.
Right.
But I just done you a disservice. And so what was happening is that I was always claiming a loss on my taxes every year. And when you claim a loss, you hurt your purchasing power.
Yep.
That's why you can't buy a house. I know
Yep.
people who can't refinance their property.
Yep.
And so I remember at the time, I used to always run around and say, because I had an LLC, I was a business owner. And my tax person at the time said, Will, you don't have a business, you have a hobby. You ain't making no money.
You're claiming a loss every year. You're right.
You're claiming a loss.
Right.
And so that's when I started to learn, man, I want to take this serious. And so going back to your question, you have to start learning how to separate it, okay? And here's how I give people the structure. Now, this is not financial advice. Or
We're not
like
giving
that. We're not
financial
giving
advice.
financial-
We just
I'm
giving
just saying what worked for Will
for
Roundtree.
Will Roundtree. Yeah, we got to say that every
And a
time.
lot of people who I've helped, okay?
Right, right.
And so here's the thing. First of all, you have to learn what financial entity structure works for you.
Right.
Okay? And so I wanted to be able to pay myself as a business.
Yeah.
So I wanted to file as an S corp. I get the protection of an LLC and I get the tax benefits of a corporation. And so as opposed to writing off income or revenue every single year. So for example, if you're an entrepreneur and you have your W-2 income, let's say combined you make $100,000. So they drive through one tax return. But you don't want to pay all those taxes because you got self-employment tax, like you have all these different taxes. So on $100,000, you may actually end up owing about $15,000.
Right.
So you're gonna have a bad tax person have you write off $80,000.
Right.
And it's went through one tax return, so now it shows you only made $20,000. That's a bad financial plan because you can't buy anything
Nothing with
showing
20.
your income is $20,000.
That's a fact.
And so what I started to do is I changed my tax liability by filing as an S corp. So now let's say I go solely into entrepreneurship, and now my company can pay Will
you.
Roundtree.
Right, right.
And so a part of that expense that normally I would write off as an expense,
Is going
I
to
pay
you.
me,
Yep.
which my income is taxable to the company.
Right.
And so here's something that a lot of people don't know. Whatever your salary is for your company, that's not what the job makes in profit. That's what they figured out to write off on their taxes.
Exactly.
So if your company pays you $50,000, that's because that's an expense to the company. That's not how they don't care how much you made them because they're trying to make their
Maximize.
bottom line.
Yeah,
They're
exactly.
maximizing their bottom line. And so you have to learn, like, one, where do you want your tax structure to be? You know, two, and I tell people very candidly, you got to pay to play. If
Yep.
you're not willing to pay taxes,
Yep.
you're never going to make money.
Yep.
Period. But as you start making more money and learning the different concepts of, Robert Kiyosaki has this book called The Cash Flow Quadrant. Everybody only focuses on being a business owner.
Yep.
The goal is to become an investor.
Investor, yeah.
Because when you become an investor, that's where the tax benefits are at. So I don't keep money in banks. I buy assets. Because now if I need money, I borrow against the assets and I don't pay any taxes. And so you have to start learning those different concepts of what works for you. But if you are not willing to pay, or as I call it, pay to play with the IRS,
Yep.
you'll never get to the places economically you want to get to. And the last thing, as I end up on this question, people who make 7 figures pay less in taxes than people who make 6 figures. Because a lot of people in the 7-figure range, they're investors.
Yep.
And so we've learned to mitigate our tax liability through our tax structure by owning asset classes. And we're not just focused on saying we make $100,000 just to make $100,000 because
Right.
tax is going to eat you up.
Every
And
time.
so you got to learn how to separate that properly, and you got to find a good tax strategist and not just somebody who want to get you a tax refund every year.
Right.
Matter of fact, the goal should not be to get a tax refund.
I'm telling you.
That should be the goal. Yeah.
The goal is definitely pay taxes until you tell we sitting at dinner talking about how much money we pay in taxes. Like, bro, they got me for such and such this year.
man.
But the good thing is, if they got you for it, you got it to pay. So you got to look at it like that as well.
Definitely.
Our next question. What's your name, my sister?
Hi, my name's Kim.
Hey, Kim.
So can we talk about student loan debt? Because I think that business-wise, a lot of people might think that is a detriment to them having success business-wise. So do you have tips on maybe paying those off? And then how does that actually influence your business, starting your business?
Definitely. So the thing I say about student loan debt, I mean, I could go so many different directions with this. See, when I'm talking to a lot of my parents who are getting ready to send their children to school, I have them look at like college as a business. I think all too often, especially in the black community, we've looked at college as like the end goal.
Yes.
And we don't take it serious enough. Like, I've yet to meet somebody who went to school and paid $200,000 for a water basket weaving degree, and they are living the life they want to live. Like, we have to start looking at college like a business decision.
Right.
Okay, if you're going to go to college and it's going to cost X amount of dollars, what is my earning potential? And we already know the average 4-year degree is $100,000 off the rip, because college keeps increasing.
Yeah.
But the income isn't.
Right.
And then we have to understand college is a business, which is why they have a recruiter, and they get paid commissions for recruiting us.
Right.
But to answer a question, 'cause I could talk about that forever, is student loan debt definitely impacts what's called your debt to income ratio.
Yes.
Okay, so if you have X amount in student loan debt, and let's say your payments monthly is $1,000, based upon your overall income, banks or whatever you're trying to lend have thresholds of what your DTI has to be. So for, let's say you're looking at
DTI means debt to income.
Meaning, if you make $5,000 a month, you have to figure out what your expenses are.
Right.
And you'll be surprised, most people don't know. And I'll tell you why they don't know. Because they don't budget.
Exactly.
But then not only that, they don't know because most people live off of their gross income.
Right.
I'm gonna give y'all a real lesson here. Gross income is not what you bring home. It's gross because it makes you throw up because they lying to you.
Right.
And that's how I kind of uniquely put it. You actually bring home what's called your net. So, and unfortunately, when you go and apply for a house and a car, they put you at your max budget because that's how they make their money.
They make their money, right.
So they put you in a position where off top you've lost. And so this is why a lot of people are poor economically, because you're playing a game that you will never, ever win when you don't understand the cost of money. So if you make $5,000, if their job says, okay, you make $5,000 a month, and I remember literally, I used to be one of these people. I'm sitting at work calculating how much I can afford for a car or house payment off of the $5,000. No, you may bring home $3,500 of that.
Exactly.
And so when you have your debt to income ratio, now you have to calculate your expenses off the $3,500, not the $5,000.
Right.
And so when you have student loan debt, yes, unfortunately, we have so many people who are in that place, and it's ruining economic potential for a lot of people. But this is how I just kind of candidly put it. We gotta bring in some more income, some kind of way, or we have to mitigate other expenses. Now, depending on the amount of debt of the student loan debt and how it's being charged for you at interest, sometimes we went out and have gotten people different loans to be able to consolidate their debt. Sometimes, there's different programs to help people to be able to do like forbearances and income. I forgot what they call them, like where you pay the amount based upon your income.
Yeah.
I tell people, go volunteer and work for a nonprofit, because after so many years, they'll actually forgive a portion of your student loan debt. So it's a lot of different ways, but the biggest thing that we really have to learn, no matter where your income is at, your expenses, if your DTI, your debt to income ratio is too high, we have to bring in more income. Sell stuff on Craig's, like we have to figure out a way to make other
money.
Income, because that's the one thing that is normally the hardest for most people, is because most people are over leveraged.
Right.
And we just got to bring in more income, some kind of way. And sometimes you'd be surprised how simple it really can be. Simple doesn't necessarily mean easy.
Right.
It just means we have to get more strategic.
Right.
But yeah, student loan debt, and I tell people there's really not a cute answer to solving that problem.
Right.
You know what I'm saying?
That makes total sense, man. Let me get we'd say this is our last question from the audience. Yes, sir.
Appreciate it. My name is Scott, and my lady and I, Tiffany, she's sitting in the back. We are at that point where we got our personal credit pretty much aligned, really good place. Started our LLC. We want to get into real estate as well. And the thing is, we're trying to figure out, like, what are some of the specific things we can do to build our business credit so that we can later move our homes. We both own a home each. We want to move those into the LLC, right? And so how do we build that business credit so that, to your point earlier, we can go to the bank and the bank is looking at it as a viable place for us to either loan or borrow money against? And we're just kind of struggling with that right now.
Yeah, no, great. I love that question. So I know there's a couple questions in there. So when it comes to first, do you own the home outright? Okay, so I often tell people that I would if you have houses that are your primary residencies, I will put them in a trust, your primary homes. Investment properties, you can have a trust that owns the LLC, and you definitely want to put all your investment properties. But if there's a lien on the houses, especially if you did it through FHA, the bank will not let you put those in an LLC. The bank will not let you put a primary residency into an LLC. And there are some advantages and disadvantages of doing that. I typically tell people, your primary residency, I don't think I would want it in an LLC anyway. I would rather solely have it in a trust because you have to understand, too, that LLC, if it gets sued, you could lose that property.
Right.
So so I often tell people everything is going to be dependent on their particular scenario, but I would not put my primary home under a LLC. Now, as far as like how do you properly position yourself, and I love this question. So now, let me give the upside and the downside, because there's a lot of bad information out there when it comes to business credit. So I know a lot of people talk about these. A lot of people talk about, hey, go out there and get these net 30 accounts. You don't got to do all that. I'm telling you, it's basically people who are selling people on old information from like 2005. And so literally, here's all you have to do. And we have some bank partners back there. Hopefully you get with BMO Harris, and you probably already qualify today. If you have good credit, you have an LLC, you at least can go and apply for 2 different credit facilities, okay? You can apply for a personal credit card and a business credit card right off the rip, even if your company is a day old. Let me tell you why that's powerful. So let's say between both of those credit cards, on the personal side, you get $25,000. On the business side, you get another $25,000. You now have access to $50,000 of credit that you can use. Now, you can go to bank 2, do the same thing. Get another personal credit card, another business credit card. Now you have $100,000 of credit that you can use.